Hello, everybody. Welcome to our live stream to start December. Uh, I originally was going to make this the 90,000 subscriber live stream, but I'm going to do that one in 2 weeks because we haven't hit the 90K threshold yet, although we're pretty close. And so, as a result, we're going to have a special thematic episode today, which is going to be about housing and cost of living and a lot of other related issues. Um, if my goal still is to get to 100K subscribers by Christmas, I don't know if we'll be able to add 10,000 in 20 days, but spread the word and hopefully we can get there. But now I'm going to kind of get started on the core topic. The way this is going to be structured is that I'm going to save questions until after I answer and discuss the main topics of this live stream, but still feel free to ask your questions. I'll get to them later when I can. And if you want to ensure that your question is answered, please make it a super chat because the bulk of this live stream is probably not going to be Q&A. So the main thing I want to talk about really is housing and a little bit of a different angle. You hear enough people on YouTube complain about the cost of living and how unaffordable everything is. So I'm not going to really repeat that. But the bigger topic I really want to talk about is there's simply more to life than owning a house. A lot of my millennial peers and a lot of Gen Zers, their main dream is simply owning a house. Like I ask young people who I know, and it's like, what is your goal in life? Like, what do you really want to accomplish? And their primary goal is to buy a house. It's not start a business. It's not to pursue a career for its own intrinsic sake. It's not even having a family. It's simply just, I want to buy a house. And I think that is actually a very low bar. And I'm going to get into why I really think that's the case. But I think the main root of it is this is not really a positive ambition, but more of a chase for security. And uh, it's a mix of security and just also just a certain simple material goal. And the first thing is that it's also very geographic. Like where you live very greatly influences it, but it doesn't really change matters. Um, Basically, whenever I hear all I really want to buy a house, the answer I really think is that it. That's like your summit. That's your Everest. Like I remember I used to growing up, like hear people say, "Oh, buying a house is just chaining yourself to a mortgage, and you're going to be stuck in the same town and the same job, and eliminate your flexibility." And now what a previous generation of the Gen Xers thought was a ball and chain for their descendants is now the whole goal. And it's not, and owning a house is not even owning a house in cash. They just say, I want to own a house and have a mortgage. A house is a shelter, a house is capital preservation, and it could serve as forced savings for people who do not have the inclination to save money on their own. It's definitely useful. Like everybody needs a place to live. So I'm not, but that calling it the end game is just a simple requirement really to live or to have a family, I think is a little bit low of an expectation. And housing is expensive, way more expensive than it was in the past. And like housing prices are up like 40% in the major metro coastal areas since 2020, whereas wages are up maybe 15%. So there's a real gap there. But the irony really is that with all these people lowering their ambition to something as simple as owning a house and not really striving for anything bigger than that, it is opening the door for people who do want other things because the correlation between hard work and success is starting to steepen again. This is something I've talked about for years when this channel was a lot less popular. The idea of the correlation between hard work and success used to be this, and it's sloped down. And now it's starting to tick back up because of trends such as quiet quitting and people just kind of giving up on bigger dreams because you've had society and the media say, oh, the higher cost of living or the political system or AI is going to make it so that it's impossible to do things. And a lot of people take that medicine and the black pill and just give up. It leads a lot of opportunities for those who actually want to go and do something. They're moving up a lot faster than in previous generations. Whereas my generation, when I graduated from college, most people did believe in grind set and working hard. And people like Gary V's of the world were really popular and hustle culture and all that. And that had the opposite effect since everybody was trying to go all in. You had the cost of living go up because all these high paying jobs are concentrated in a few cities. And you had people willing to work for low wages because they were scared of job insecurity from '08. And so it created the opposite dynamic that we have now. So, um, yeah, that's kind of my take really when it comes to that side of it. And it's not just simply just rise and grind. Like a lot of people are just simply opting out and employers are complaining about a lot of the lower bar for people who are not willing to put up beyond the minimum. But the thing is that the difference, so you don't fall in the same trap as like millennials did, is that you don't really just put the minimum at simply um, what's it called? Working hard at a job where your best case scenario for putting the extra effort is and maybe an extra 15% in salary and a little bit snazzier of a title on your business card. You have to work in a job where there's actually some sort of correlation between effort and results. Usually that's like an eat as you kill type profession, whether it's entrepreneurship, whether that's having a P&L and some sort of investment role, whether that's sales, or something that has like a hard deliverable, so that your effort is correlated with your compensation. And I think a lot of people put like a performance pay based effort into jobs that were not performance based. And I think that was kind of the big mistake for millennials to a certain degree. Um, and so now you just really have people whose their job is and goal is simply to acquire a house. And the other thing is too is you probably acquire that house right now if you really wanted to. You could buy a house in a different place of the country where you're going to live. And pretty much in every rural area, you could theoretically own a piece of property for under $250,000 easily. So like you can do it on a down payment of 50 grand or less, depending on if you're putting 20% or less or the cost of the property. So like that's that's theoretically that's actually fairly easy to do. I mean, again, that's kind of, you would say, oh, Nick, that's a cop out. So um, yeah, nobody wants to live in those places. I can't live in that house because my job is in the big city and there's nobody who wants to live in it. So I can't rent it out anyway. And yeah, this is something we have seen in the urban economies. Like the most extreme example is a country such as like Thailand, where Bangkok real estate is very expensive, but everything outside of it is dirt cheap because of a lack of jobs. But nevertheless, um, you can, what's it called? Even once you get the mortgage, the question really is now what? Great, you got a house. You somehow got a windfall that allowed you to have a down payment in a house in the city you live in and you're living in it. So if you've got your house, so what are you going to do now? You're just going to coast the rest of your life? Uh, what is the point beyond that? Like, even if you get your house at a later age, like this, the average home buyer now is 40, first time home buyer is now 40 years old versus say 32 10 years ago. Okay, great. So what are you going to do with the second half of your life if you don't have any bigger goals than buying a house? And that's the thing. People whose goal is really simply just security and getting everything um, comfortable, and they spend all their time struggling for that. And then once they get there, their life is left with an existential void. I mean, I saw this when I lived in a super big financial center city, and you had these people whose lives revolved really simply like going to their job, putting the 40 to 60 hours a week in that, going to the same yoga class after, then going to the same bars on with their same friends, mix and repeat for 10 years in a row and not really making any real progress other than a few vacations to share on Instagram. I call it the urban tribe loop. Some people call it the urban monoculture loop, but it's the same really idea. It's like you need to have a bigger purpose that's driving you. And the house should be the byproduct of accomplishing that success. So instead of saying, look, I'm going to work at this job I don't really care about and try to save to the bare minimum as possible, like save the maximum I can so that I can scrounge for a down payment or um, make other bad decisions that will help me get to that house faster, whether in your relationships or whether in your quality of life or other things. The better choice would really to be is what is my bigger goal? If I accomplish the bigger goal, the house will come. Like, so say for example, instead, like I use my own example. I had a choice that I had enough money saved that I could have put either a down payment on a condo or I could have started my business. And like I took the latter and I looked stupid for the first several years, to be quite honest, because it takes a while for a business to get going. And I saw my friends or my family members who did buy real estate and see their properties go up in value or not have to worry about rent increases and all that. And yeah, whereas I was kind of floundering. But in the long run, I felt like I made the right decision because I had a more fulfilling life pursuing what I actually wanted to do. And I think also in the long run, the investment and the effort in my building my company will pay off enough that I will be able to buy more of a house or a condo than I would have if I just stayed at my 9 to 5 and used that money towards a condo instead. And there are other examples really for that case. And but the point being is you got to have a bigger goal. And if you pursue the bigger goal, you'll eventually make enough money to buy the house, or you'll have the circumstances that you will be able to build a lifestyle that is worthwhile, especially instead of just chasing security, especially if you live in a developed country like the United States, where like the floor is high enough that if things really get bad, assuming you're under like 65 years old, you can get back on your feet. So yeah. And I get your point, but I don't think everybody wants to have a bigger goal and prefer to coast. Well, society isn't designed for everybody to coast. Like the 60s and the 60s were kind of an anomaly. And even then they didn't coast. Like the average house size was 1,000 square feet in the 1950s versus 2,000 square feet today. Uh, and lifespans were shorter, jobs were not as fulfilling or not as good. I mean, again, if you wanted to put minimum amounts of effort and get by, you can do that. You just won't have a deed of a property like today. But the thing is that society shouldn't really be designed fundamentally for people to coast. If you want that, I mean, there are countries that maybe are structured that way, mainly Western European nations, but that's why they don't grow. You have a choice of either having a dynamic society or one that is more prioritizing social stability. But back to my point really about the the house thing. It's like um really it's I don't think it's a life mission. It's a really just a starting checkpoint. Um, it's not like it's the same as kind of like what a lot of people have turned marriage into. Marriage used to be like a starting checkpoint for people. Like you found somebody you want to build a life with, you get married, and then you kind of fight together to build a better future for each other. And now, as I mentioned in my video about the economics, social class of marriage has become a capstone for many people. It's that they do after they've had their success in their career and bought their properties and all that. And you're now looking at the same thing for real estate, something that used to be, and I think economics has something to do with it, but it used to be something that was kind of a start, and now it's kind of something that people's magnum opus. And so it's just again like we live in so like I think the point being is you got to set the bar really just higher than a down payment. It should be the floor really for your ambition. And this is not really just, I'm not telling everybody to go do a startup. Other people have, maybe it's advance up the ladder in your own career that you have now. Maybe it's some sort of creative pursuit, like is it writing a book or some work of art, or maybe you want to do something in the world of politics or activism. Everybody has different goals in life fundamentally, but I think that the house really just kind of a byproduct of it. And if you want a goal of simply buying a house then coasting, then your income is likely not going to stay high enough long enough to sustain the mortgage anyway. That's the other kind of side of this that's not really discussed. Like job security in corporate America, as you guys all know, is not as good as it used to be, particularly because of AI disrupting a lot of the career ladder. So you're like, hey, great. I was able to get my down payment. I bought my house. I just got to be able to pay this off for 30 more years and I'll be able to have a comfortable retirement. Well, if you get laid off halfway through that, or you have some sort of family thing happen that requires you to sell the house, uh, where does that leave you at that point? Uh, so, yeah. And if so, that's kind of it's not even the end game. Even if you got there, maybe if you paid your house entirely in cash, then it would be you could theoretically, but you still got to service the property taxes. So it's especially if you bought your house more recently and are not protected by Prop 13. So here in California, so that's kind of the so that's even it's if you don't hit the end game of it, it's still not going to you're still not out of the race. And so that's kind of the other kind of side for this. Um, and there are a lot of also downsides to it. So, like, again, if you have a very stable job, like you work for like a high paying government job, or you've started a company years ago and you're well established and you know that you're not going to need to leave and you want to found the place you want to be, then these downsides aren't as much. But mobility, the lack thereof, um, and a neighborhood maybe changing for the worse around you without you being able to get out is a particular problem. And then there's also the other thing, which I talked about in my debunking the doomer series on real estate, is that I think the built-in assumption is that real estate is this asset that gets way better returns than any other asset. Um, that's not true really at all. Like even the most expensive neighborhoods in California and New York, um, if you bought a house in 1995, which is before housing really took off, that's 2000 was when housing started to depart from general inflation, and you use that same money on either buying the S&P or in bars of gold or GLD if you want to use a more liquid form of gold, the gold and the S&P would have outperformed real estate by a significant margin. Um, Gold has gone up more than 2% annualized more than housing over that same period, and the S&P has gone up more than 4% more than housing over that same period. And I'm saying those are the conservative estimates. I think it's actually considerably higher. I just don't have the stat on here to show it. But the point being is, um, it's not even the return profile isn't that great. So like they're like, oh, what if I bought a bunch of rental properties? I mean, and I use the leverage of a mortgage to be able to make myself wealthier. And I'm like, that's not really buying a house for your own security anymore. That's building a business. It's just building a real estate business. You're now an entrepreneur, except your practice is now being um, a commercial landlord. So that is that's not really the same as a goal of simply buying a house. Um, and yeah, the thing is that you have to also, and right now you have a lot of places, again, I'm biased because I live in California, where rents are a fraction of what the mortgage would be. And it really only makes sense if you don't have enough discipline to save outside of your mortgage payment, or it's a consumption asset. Like when I buy a house, it's probably I'm not expecting to get a return on it. I want to buy a nice house to live with my future family, and if it goes down, I won't really care because it's just a place where I want to live. I would actually expect to lose money in real terms given how high housing prices are relative to wages and demographic trends. And that's the other real thing to talk about here is that the boomer generation is starting to die off. Every year in most metropolitan areas, the housing market is going to grow 2 to 4% just on attrition. So you will have simply more retirees passing away than you have new families being formed. And the most common answer that I get to this is, well, wouldn't the kids just live in it? That might be true, but the kids will either have to sell the house they're living in currently or rent it out if they move to their parents' house, or they'll sell their parents' house. Especially for the more likely to sell the parents' house because they probably can't afford to service the stepped up property taxes. And so it's going to result either way in an increase net to the supply of real estate. And unless if you have a drastic political change on immigration, which I think is unlikely given AI disrupting jobs, which I think is going to keep even the Democrats restrictionist on immigration, you're not going to have to, there's not going to be simply enough young people with the liquidity to fill the bid for these houses. Like right now, the real estate market is carried by boomers selling real estate to each other. It's usually they sell it from one city, move to a different city for lifestyle reasons or whatever, and or lower taxes, and then they will sell their own property and use the equity from that to buy the new one. That's why the average home age is like 60 for a home buyer right now. It's because younger people have been effectively priced out to the combination of high prices and high interest rates. And if you don't have immigration to bail you out, and if you don't have wealthy older people trading properties with each other to keep the market afloat, there will be a re-rating lower. Um, and it might be a very slow burn, but it is starting to happen. There are certain markets like San Francisco that are still trading below 2016 peaks, and I think other cities are already in the process of catching up. Before I keep going with this, I'm going to read the super chat. Thank you. I work as a shipper in Canada. In Canada, a European old money alternative is crown law, some European elite control. Is there an age where someone should avoid blue collar work? Is America becoming protectionist? Okay, you've got a lot of questions there. Um, First, um, it I don't really think European old money would want to move to Canada because the climate's not that good and the taxation is fairly high. Um, I mean, if I mean the place where European old money would want to move to would probably be like either Italy because they have very generous non dom residency tax policy, Switzerland, the United States, Singapore, or the UAE would all be probably choices over Canada. Um, is crown law some sort of European control? I mean, not really. I don't think there's that many. I don't think there's really any policy determined by the British Crown anymore in Canada. It's a de facto independent country, even though they technically have the king as their sovereign monarch. Is there an age where one should avoid blue collar work? Um, if you basically when you start to see your body break down, that's kind of the time because if you try to work hard and when you're already starting to fall apart, then it's probably going to make your life in older age a lot less worthwhile. And if you do a blue collar thing that's not overly physically taxing, then there really isn't an age to avoid blue collar work. So, and again, I've never done really any blue collar work beyond a few assignments and internships when I was younger, but I think it's just how much your body can handle. And is America becoming protectionist? Well, it's certainly trending that way. Uh, whether this administration is the peak of protectionism in the United States or not is to be determined. Hopefully that answers all your questions. I'm going to get back now to the core of this discussion when it comes to my thoughts on housing and really better ways um, to pursue goals. So, like, again, a point to really make is one, you have most of your peers are kind of sleepwalking right now and quiet quitting. And so you can use that to your advantage. And second, the even though AI is going to disrupt a lot of jobs, a lot of the technology is going to allow you to leverage to do a lot more work with a lot less people. Like I know just in the case of this channel, I've been able to, with the help of using AI tools with my post production, make a lot more videos that without removing any of the authenticity or the originality of my content because I could spend more time actually researching my content and making and actually filming it and recording and sharing my ideas than on all the back end stuff that I can now automate. And it's not just in content creation. There's really other businesses that you can do that. And the other thing too is the main thing, if you really want security, which I think is ultimately the goal for these people who want housing, it's not they don't really want a house. A house is a symbol for security because in a house, nobody can kick you out if you own your house. I mean, I guess the bank could if you didn't pay your mortgage, or the government if you don't pay your property taxes. But like, there's not some landlord who's going to evict you one day, and you have the safety to if you change the paint on the walls or something like that. So, or if they want to move in one day. So, I think the main thing that a house is really just a proxy of is just searching for security. And I think there are better ways to do that. I think really the better way to try and truly security is I call planting a flag in your community. Like I think our culture gets us backward. You're not stability doesn't come from consumption or acquiring a mortgage or buying like a piece of property. Stability comes from actually becoming indispensable by planting a flag in your community. And how do you go about what do I mean by planting a flag in your community? First of all, it's the idea that you develop a reputation among your peers, um, or the people who live in your local area for having either a set sort of skills or certain character traits or reliability and a variety of other things so that you build a social support network that will help you through good times and bad. Um, Outside of like the small business owners, really in mid tier cities and suburban areas, this kind of ethos is really kind of dying in the United States. And I think really the rest of society can kind of learn from this. And there's three really ways you get stability through just planting a flag in the community. One is reputation. What people say about you when you're not in the room, that's really social capital, and it pays dividends longer than um, really any stock portfolio would in the sense. Like, if say for example, if you are somebody who is good at software development or something like that, and you're good at building websites for a certain type of industry company, like real estate brokerage firms. I'm using this as a random example. So then, like, you do it for one of the realtors in town, they get an increase in sales or like a lot of compliments on their website. They'll tell, hey, the, John is really good at making these websites for real estate people. And you'll develop a reputation of being good at that. And by having that, you will have people who always want to be customers for your business or send you referrals when they think about you. Um, I've noticed I've done this with people in certain industries. I meet people who fit a certain niche, and um, I may not need what they're doing, but I know that they're good at what they're doing based on what mutual friends or people in the community have said. And I've seen proofs of their work. And so if I have somebody who needs their product or service, I will send them over. And it's not just me, it's several other people in a community that will do that. And so that's kind of one way. And it's not even, you don't even have to be the best at what you do necessarily to build that reputation. You just need to be somebody who is likable and trustworthy, because as our social trust on the macro level in society is shrinking, building a local level of high trust has become a much stronger asset than previously. Um, and the next real step is skill. I mean, again, it's not job titles, it's durable competence at doing something that people value. I mean, it scales and survives like layoffs, recessions, and AI trends. And if you are in a profession that is on the front lines of that, you have to be able to figure out how to integrate the new technology to keep yourself fresh. And a lot of people don't really like to do this because our whole culture is sold on basically once you graduate from college and have a first few years in corporate America, maybe like by the time you're 25 to 28, you should be settled at what you do and you should be able to coast by in doing that for 30 plus years. And the cognitive dissonance of that not really being in line with reality is a problem. And I'm actually going to go deeper to this in a video I do in January about um, ageism and corporate ageism, particularly in the workforce, which I think is actually real. And the question really isn't whether corporate ageism is real or not. It's more of how do I adapt to a world where corporate America is basically more like on the job training for professionals than a end goal stage. So yeah, that's kind of step 2, and then 3 is network. It's not really just random followers like on social media. I mean, it's people who you actually know in the real world and who will vouch for you and will help you when needed. Um, and people will go out of the way to help you once you have kind of proven that you are somebody of integrity and you have something to offer to help others. And now that I kind of explained that the ways you do gain stability, now how do we do this planting the flag? The first step is you got to find a city you like living in. Like this doesn't work in super big cities like New York or Chicago or LA because in places like that or San Francisco, the people don't live there long enough. Most people who move to these really big cities are generally younger professionals or very career driven people who transfer a lot to different offices all over the country or all over the world. So, like when I lived in one of these mega cities 10 years ago, all the people I knew when I first went there, my peers from college or other parts of my life who were there when I first went there, 90% of them were gone by the time I moved out of that city 3 years later. And that's not really unusual in a big city like that. The combination of the high cost of living making family life unsustainable in those places and just um, the transitory nature of like modern career life for ambitious people, um, it really kind of makes it more of a phase of life than a permanent home. And that's, I think, why a lot of cities generally don't have the best governance because most people don't live there permanently. It's either the people who tend to live there are either older people who are heavily protected by rent controls or other government subsidies that make it affordable for them to live there than they wouldn't otherwise, or it's transients who are in transplants who are in and out for short periods of time. And neither of those groups has any concern about the long term sustainability of the city because either they benefit from the fiscal largesse or the um, the things that are causing the issues in the city to begin with, or they won't be there long enough to face the consequences in the long run. And so as a result, you can't really build community in a city that well that's too big because you can't build a reputation if it's never the same people around. And that's why, like, when I did live in a big mega city, I didn't really try to plant my flag there because one, I just personally didn't like it, that city. Even though I loved my job there, I just didn't like the actual place. But second, like, yeah, the transient nature is that you investing in your community is a negative return game. So where you do need to go is you either need to go to a suburb, particularly like a lot of the new money suburbs I talk about in my Geography of Wealth series is probably an ideal place to go to. And you can watch through all my series, I've covered at least like 20 cities in America, I think, that have some examples, or a mid-sized metro area that is a smaller town that is big enough that there's enough economic opportunities. Like you can't live in a super small city of like 150,000 people or less in the micropolitan area. There just won't be enough job opportunities, particularly for higher skilled, higher educated people. But um, they are what's it called? What was I going to say? But you need to be in a place that is small enough that you can actually develop a reputation and people are actually going to stick around. And the business community, more importantly, is small enough that you can get to know them all. Like, again, like the ideal size probably for a metro area fit is like 300,000 to 3 million. So like examples would be places like Orange County, California, here on the West Coast. I would say like a place um, like suburbs in like the Tampa, Florida area would be one, or maybe like Austin, Texas. Um, but like these cities are big enough where there are opportunities, but not so big that you can't actually ingratiate yourself in the community. People don't permanently stay there. Seattle could probably work as well to a certain, particularly like the suburbs on the eastern side of Lake Washington. Uh, there's again, most American cities fit. It's just you don't want to be in a metro area with more than say like 3 million people. That's when it starts to get unwieldy. I got a comment here from Jared. Singapore, the most capitalist country in the world, 90% homeowners. House is the largest asset. You can't borrow against rent. Singapore is better than the US. I think Singapore does a lot of things that are better than the US, but that 90% homeowners is very misleading because they're not really homeowners. They own something called an HDB, which is effectively a government housing project that they are not allowed to sell. So like, or they at least they can't sell, they don't get to gain any sort of market appreciation. They have to sell it based on a fixed return to some other person, family who wants to live in it. So it's kind of not pure ownership like most, and they do restrict foreign ownership really for any sort of landed property. You only can buy like like a attached condo or apartment if you live in Singapore, except for a few exempted neighborhoods. And if you wanted to buy an actual single family home, they do exist, even if you're a local citizen, but they're very expensive. And even when I lived there was averages over say like 3 million bucks for one of those US. And I think it's probably higher now. So I just don't think an HDB is the same as owning like a property. It's kind of like the equivalent to those in America are like a lot of college towns where there are certain university subdivisions that you can buy a house on a subsidized price, a discounted price because the land under it is owned by the university, but you have to be a professor, like a current or retired faculty of that university to live in the neighborhood, and you only can sell it to another current or retired member of faculty. And if your family wants to inherit it, they have to leave. So it's similar to that kind of structure. So I don't think it's purely it's not really the pure sense of ownership like the way you put it out to be. So that's kind of my thought. And I do agree. Singapore has small land constraints, and Hong Kong has a similar kind of subsidized home ownership, and it's better than like the standard housing projects or Section 8 in the United States. So like it does help for social stability in that way, but it's not really the same method of building wealth as it would be for buying a freestanding property in a place with stronger um, property rights. So yeah, that's kind of, and I think you could fix a lot of the problems really with housing through a few macroprudential policies. I can get into that later on this live stream if you want, but I was going to now get back to kind of the planting the flag. Other examples of cities, again, Madison, Wisconsin, Tampa, Scottsdale, San Diego. But yeah, again, a place big enough where there's actual job opportunities and a large small business community, but small enough that you can actually get to know all of them. And I did a video. I interviewed my friend Christian White, who's now actually has a somewhat big YouTube channel of his own, where a few years ago, where I talked to him about like the day-to-day activities of how you actually go out there and build yourself in a community and create those social ties. But the next step really is you got to build some sort of niche or expertise, something that you are. I've mentioned before, and I've done in career advice related videos. The intersection of the Venn diagram of what you're good at, what people ask you for help with, which is kind of evidence for demand, and what you can what excites you. So it's something you like to do, something you can do better than 95% of people, and something where people actually want your help with. And I think everybody if they really think hard enough and put the effort into introspection to do this, has at least something that fits in it. It may not be what you want it to be, but there is an opportunity there. And you just go by committing and saying, look, I'm going to move to this city. I'm not going to leave. I'm going to make an effort to, I don't know, once a week maybe, go to some event or join some civic organization that's aligned with your values, and go out there and just tell people who you are, what you're about, and what you're going to do. And you can do this through mentoring people. You can do this through just showing up to certain events, joining local organizations, and you'll eventually create value within your circle. You can start certain projects, host events yourself. And if you do this enough for a longer period of time, you'll start getting a reputation. You'll start getting people asking you for services if you're a business, or if you're an employee, they might give you referrals for better job opportunities in your community that use your skills. And that infrastructure is a lot helpful because when you lose your job, you have somebody you can call. If you lost a client for your business or you're looking to expand, you know which people can help you with whatever project you need, whether in your business or your personal life. And I think this creates, in a sense, a lot more stability than home ownership. And eventually you'll get to home ownership. Like, I'm not anti home ownership. I'm generally think it's especially if you live in a city where the cap rates are still reasonable, which I think they'll start to become more reasonable over time. Home ownership is worth having. It's just that I'm against is that home ownership being the primary dream and the primary goal above all else. It's more just like the product. Um, think of it like in any other sort of consumption item or investment. Like, would you say really your goal is to have $100,000 in the S&P 500? Is that like a life goal, or is buying a sports car really a life goal? No, they are byproducts of you accomplishing something that will allow you to have the wealth to get there. Um, I think that this housing is not really a real ambition. It's really a risk minimization policy, kind of um, disguised really as a goal. So that's really just kind of my general thoughts on this. But I have a few questions really to ask you guys, because this might help you kind of rework your perspective on this. Like, what would you do with your life if stability is guaranteed? Say, like, for example, you got a pension for $10,000 a month, like enough that you can live comfortably, but not enough that you can just travel all day and like be and have and not be price conscious of stuff. And what is something you would try if you wouldn't fail? Um, and if you, let's just say you inherited a house from some anonymous cousin you didn't know existed tomorrow, and you had a house and it was paid off full and clear. You only had to cover property taxes. What's next? What would you do with your life? And I think those are probably the type of answers of those questions are probably more than your real goals. Because when I hear about the goal of buying a house, it's more telling me that you're afraid of failure, you're afraid of competition from a harsh world, you're afraid of um, what's it called, not being able to catch up with the cost of living, and you just want kind of just comfort and stability, which again, people need comfort and stability. It's like you can't have life be perpetual stress. But really at the same time, um, you what's it called? You need to figure out really what's bigger than that. Um, and that's kind of what some sort of meaning, because once you get to the house, you're going to have a big existential gap. and prioritize, and like some of these higher order goals, like if you need ideas, is one, mastering a certain craft or a skill or an artistic pursuit, planting your flag and building the community, creating some sort of project that lasts longer than yourself. It could be business, it could be work of art, it can be um, triggering some sort of social or cultural change. It could be having a family for multiple generations, a lot of other things. Building general financial independence, starting a business, um, being an example through mentoring others, maintaining your long-term health, and like, yeah, there's a lot of other kind of goals that are much bigger and more fulfilling and last a lifetime versus just hitting some sort of empty consumption topic. So, yeah. Now, the other thing I wanted to bring up, that now that I've kind of talked about the house thing, and I'll take questions on this, so feel free to write them in. I'll scroll back to it later. Um, is Michael Green. I don't know if you guys are familiar with Michael Green. I think he's actually a really interesting economic and financial thinker. He's been one who's been really ahead of time of the risk of the stock market being too heavily concentrated in index funds. And he had a thought-provoking piece that kind of triggered a lot of the think tanks in America with the idea of the minimum income that should be the poverty line. And his argument is that the poverty line should be $140,000 US per year. And that seems on its surface extremely high, because the current um, poverty line in the US, just from federal poverty line standards, is 15,000 for an individual and 32,000 for a family, um, which is way too low. I don't really think anybody in America can feed a family of four and shelter them at $32,000 a year, even if you live in the cheapest part of the United States. Um, and I don't think an individual can live on $15,000 a year, even in the cheapest part of the United States either. So I think the truth is probably closer to Michael Green than it is to the current government number on this. But Michael Green's argument is really basically that, look, the cost of living is much higher than when these numbers were last updated. Maybe they're factoring like the amount of calories you need to survive, but just given how high housing costs have gotten, how high education costs have gotten, how high healthcare costs have gotten, and how high taxes have gotten, not necessarily like tax rates going up, but bracket creep, in the sense that the minimum amount of income needed to live is much higher. So you're default pushed into higher tax brackets, and that's how they get you with higher taxes. And the combination of all of those things, um, without wages really going up proportionately, is causing the poverty level to be probably much higher than a lot of people like to think. And I've talked about these issues in several videos. Really, I've done a whole playlist called Real Estate and the Cost of Living, where I kind of gone deep down into all these cost of living related issues and why they actually kind of matter and what the truth is behind them. Because it's not really the doomer truth that you see on YouTube, but at the same time, a lot of what the official data and the official story on a lot of this cost of living stuff is kind of political gaslighting. So the truth is somewhere in between. I was like, I tested his hypothesis. Like, look, is 144,000 really the right number? And I do recommend reading his Substack, but I think what's more interesting is the part 2 to his Substack, which I'm going to have the link here too for you guys to read, because he talks about the social class implications of the poverty line not being what the government says it is, and how the machine has reacted to his comments. So I think it's a good read. And I also, if you like Substack, I have a Substack too. If you want to stay in touch with content that I make on YouTube and other writing and updates on events and other things, I recommend you join my Substack. And if you do, you get a free download of a list of my top 100 books about economics, social class, and finance. Okay, so I got a super chat before I get into Michael Green. Getting trust money soon. Family says buy a house, but I'm thinking expand my business, purchase retiring identical businesses in my territory with cash flow. Thoughts? Central Florida home services. For individual situations like this, it is probably better that you kind of contact me directly, because I can't really give too much personal investment advice due to the nature of my profession. As if you guys know, I run a wealth management firm, and part of the rules, if you're licensed in this, is you can't really give specific investment advice to the general public. And nothing I say in this is investment advice. Please do your own research or find an advisor to help you. And if you want to possibly see how my firm and myself can help you, feel free to schedule a consultation or a call via my Calendly. But so, I mean, in general, I'd have to, the way I could give you a little bit about your thought process, how to go about this, Chance. First thing is that what is the ROI on your business versus the appreciation of your cash on cash return for buying a property? And the second thing is that when you do that, is I think the macro of Central Florida is probably going to still be pretty good. Low tax state, warm weather, retirees, even if you have the old age of Florida on average, the retirees from other places moving there are still going to be large enough to at least replace those that depart. So I actually do like the fundamentals of Central Florida, particularly Florida in the long run from like a macroeconomic perspective. But I would need to know more about the specific numbers of your business returns versus like realistically what the cash on cash and rent yields are in that area. So yeah. And then you might want to do a diversification, like a mix, like put some of it into reinvesting in your business, some of it into real estate, and some of it into more publicly traded securities. But again, I can't give civic advice. I need to know your situation. I need to know what the balance of the trust is. I need to know what your return profile is for various forms of investments. So, yeah, hopefully that answers question. But back to Michael Green. When it comes to Michael Green's thesis and its ideas, that basically I tried to run my own numbers on what his claims were. And they were higher, but they were still lower than what his argument really is. And it's, first of all, has to be dependent on a city, because the poverty rate in Houston is not the same as the poverty rate in Los Angeles, just mainly due to differences in taxes and cost of living. And so the way I would do this is a more dynamic model that can be adjusted. So basically, my model would be, if you're a single person, the poverty rate is 3 times the monthly price of a 25th percentile studio. So like, let's say the median studio apartment in a city is $2,000 a month. You wouldn't use the median, because somebody in poverty was not going to live in the median quality place. They're going to live in a below average quality place. So, and maybe in a below average neighborhood. So as a result, you need to adjust for that. And so I would lower it down to whatever the 25th percentile is. So let's just say rents in the 25th percentile neighborhood are maybe 20% cheaper than the than the median neighborhood. So as a result, that rent is $1,600 a month versus $2,000 a month. So $1,600 a month would be about 40 times 3 is $48,000 a month. Not 48, 4,800. So $4,800 a month. And you times that by 12, that would set the poverty line at $57,600 a year. And that is kind of how I would set the poverty rate for a single person living really in any city. And so in a place where like Manhattan, where the average studio price is like $4,000 a month, that will put your poverty line at 144,000, like Michael Green says. However, if it's in a place like Houston, where you maybe get a 25th percentile studio for $1,000 a month, then your poverty line is only $36,000 a year. Either way, that's at least double the 15,000 the government is saying. Then let's talk about families. So the next one we would do here is I would do the same thing, except instead of a studio, I do a two-bedroom apartment. Like, theoretically, you could have 2 kids share a bedroom if you were strapped for cash, and you don't need to necessarily have, like, a single family lot. Like, a two-bedroom apartment could do it, and let's just say also a 25th percentile, like, you're not gonna live in the median neighborhood if you're struggling with poverty. Um, and so let's just say in the same example, let's say it's $3,000 a month to live in a random city for a two-bedroom apartment, and it's 20% lower, that would be $2,400 a month. You times that by 3, that's 7,200, and then you times that by 12, that'll put you at $86,400, um, in this hypothetical example. And this again would change. Like in Manhattan, let's just say that two-bedroom apartment is $6,000 a month, and so you would need then 18,000, and therefore your break even would be for poverty would be $216,000 a year, which I know sounds crazy, but given the cost of living in New York, I mean, and you have to have a whole family of 4. This is why most people, when they have families in New York, they move out to the suburbs. They don't stay in Manhattan. Um, that is the that's the implication. Whereas in a place like a cheaper place, like say Houston, it'd be probably maybe 50,000. And I have numbers to share with you on this. So like the U.S. national average probably for a single person for the poverty line, if I use this across just using national data, I mean, national averages, there's really maybe Philadelphia is the closest city that to the national average one, but every city's going to have variance. And I've done several cities for examples here. Be like 47,800 would be the poverty line for a single person. 83,000 would be about for a family of 4. In Los Angeles, it'd be about 60,000 for a single person and about 96,000 for a family. New York, 92,000 for a single person and like 175,000 for a family. San Francisco, like it'd be about, I don't know, 70 to 80,000 for a person and 135 for a family. Denver, be about 40,000 a person and 90,000 for a family. And then Houston, 28,000 for a person and 81,000 for a family. So that's kind of some numbers to provide some context on what probably should be the poverty rates in a lot of these places. And most of that is driven by inflated housing prices. So, what really is the implication of raising the poverty rate? Because that's a question I saw in the discussion. And another link I kind of want to share with you guys for reference is a website that I recommend you guys learn for context. It's a place called pricedingold.com. And this shows you the cost of basic goods and services, not in US dollars, but it shows a price chart in terms of ounces of gold. And when you look at it that way, you really see that the problem isn't that everything is getting more expensive when you compare it to hard money. The thing is that just your wages are going down in value faster than everything else compared to hard money. That's why I made a video called Housing Isn't Expensive, You're Just Poor. And I know it's kind of a edgy title, but it's just the idea that basically it's not that all of a sudden like a house that was built with a concrete foundation, a few sticks of plywood is just inherently more valuable than it was 20 or 30 years ago. It's just that currency debasement and other macroeconomic factors have made the purchasing power of the median working American lower. And this has been so it's really not it's not a lot of the housing problem is not really a housing problem. It's a lack of productivity problem and a low wage problem. And I've talked about several videos about this, about the decline in quality of human capital. I've talked about this in the economics of immigration. Um, there's a lot of structural things. I think a lot of it has to do with just a bad education system that the United States has had, particularly in the secondary level for the last 30 plus years, that has made it so that the next generation of workers may not be as skilled at the same age as the previous generation of workers, especially outside of the technology sector. You could have AI and outsourcing increase the level of competition for work and also decrease the demand, which is a driver down wages. And then also immigration increasing at very high levels has increased the supply of work. workers without jobs going up proportionately. So there's a lot of real issues that are structurally holding down wages, which are probably for another conversation. But I think that's a more of a big driver to this than just housing really in itself. Um, I just think a combination of an oversupply of labor and a bad education system has made the median marginal worker not productive enough to support themselves independently. And I think that is really kind of the root of the modern social, economic, and political problems in the United States. Is simply that, and also just a large portion of the population fundamentally believing in freedom without responsibility. But I talked about that one more on a previous um, live stream. So I don't really think it's a good idea to set the poverty line higher on the official government data for a number of reasons. Because, like, the policy implication of this is that, let's just say the poverty line is what I think it is. It's actually $80,000 a year for a family, and um, $50,000 a year for an individual. Just throwing out some hypothetical numbers here. Uh, if you rose the poverty level to that, you would be basically admitting that 50% of America is below the poverty line. Like, if you look at the percentage of families, like, don't use household data because household data is skewed. Because if you have like 4 roommates fresh out of college living in a 4-bedroom apartment together, that counts as a household of 4, even though it's not really a family. Um, and there's a lot of other skews really to that data. So if you just look at families of 4, like a husband and wife and 2 kids, like, and I have to do some estimating because the government doesn't really keep track of families' income that way. They keep, especially family size of like families of 2 or more children. But based on me just kind of looking at the data and kind of interpreting, figuring out some like reasonable estimates, I would assume that it's about 50% of families with 2 or more kids have a household income under 140,000 a year. I mean, that's and probably the other half are a bit over that. I'd say the median is somewhere between 140 and $150,000 a year for families with families of 4 um, in a traditional structure. And so, as a result, according to Michael Green, half of families are in poverty. And let's just say use my metric of, say, like $80,000 a year. Then it's about 20 to 30% of families in America are in poverty. It's probably more closer to it's in the probably in the low 20s if I had to guess. And for single individuals, if I rose the poverty line estimate to, say, $40,000 a year, it'd probably be the bottom 30% of people by that definition. Because, like, the median income for an individual, the GDP per capita is in the 80,000s per year now. And I think the median percentile for an individual wage in America is about $60,000 a year um, in the United States. And so if you're making um, sub 40,000 a year, you are in the what's it called? The bottom, say, you're the bottom 36% of Americans. Um, so basically, you'd have 36% of single people be in poverty by Michael Green's, and 50, not by my own definition. For Michael Green's definition, his probably would be at 60 or 70,000 a year. So if you rose it up to that level, 60K a year, you'd have 55% of single people in poverty by Michael Green's definition, and 50% of families. Whereas my definition is probably about 20% of families and 36% of single people would be considered under like a cost of living adjusted poverty line. Um, that is a major kind of problem. There's a lot of political and social and economic problems if we reset the poverty rate that high. Number one, I think it would cause a shock in confidence to our society and the system. If you think social trust is a problem right now, if people would really just admit, hey, the United States is an emerging market country for the bottom half of Americans, you'd start to see a lot of the social ills that are common in low trust emerging market societies become more commonplace in the United States of America. And in my video, I talked about social low trust societies about a year ago. That's not really a good thing. The cost of maintaining a low trust society is a lot more expensive. You need more private security, more surveillance. You need more auditing or more verifications for things because, like, everybody's going to assume everybody's trying to scam each other and there's going to be no goodwill. And it makes the whole planting the flag strategy I talked about before a lot less viable if we had a very low trust society at that level. Like the plant flag strategy that I talked about earlier on this live stream would not be viable in a low trust emerging market country, especially if you're not of that country's native ethnicity. Um, you would just be taken advantage of as like basically a rube. So you can't do it in that way. Um, so that's would be the first and probably the most dire consequence. And I never really hear this discussed in political circles, and I think it really should be. It's like, what is the implication of the United States being a low trust society, and how can we stop that? How can we restore confidence in people doing the right thing in general? Or how can we make it so that people actually live with more integrity and are not incentivized to screw each other for a quick buck? This is a this is like I try to talk about more real issues in terms that and economics and that actually matter without going too hard into my own political beliefs. But this is a real topic that I think needs to kind of be addressed. And I got a question here from Usama. Do you think there may be some collusion from the top on why education in America is receding? I've noticed older Americans are a lot more articulate. Well, I think there is some in our elite class who just feel like that people shouldn't have to, maybe they struggled in school, um, or they didn't like doing homework themselves. I'm really anti homework, so that might not be a good example. But the point being is that they think that, oh, like maybe we should lower the bar because we don't like to see people fail and it hurts people's feelings and all this other stuff. So there might be some like misplaced empathy. I think is a lot of the root for this. The other thing, it looks really bad if you're a politician if you have 50% or more of your students failing out of high school, and nobody wants to have that on their record. So I think a lot of it is just like covering themselves, and they're doing it at really the expense of our society. Like in general, I'm generally favor of more access to education, more access to elite institutions, more access to professional certifications, et cetera, but without lowering the bar. I think everybody should have a chance, but you can't lower the standards so that you have a minimum percentage of people graduate or pass. And when you do that, you just cause a lot of the problems with our school system, like grade inflation and passing people through grades when they shouldn't, and just stuff that is not being taught that's actually useful. I do a whole live stream about educational reform. If you want me to do a live stream on educational reform, please comment because I might do that in the future because I have a lot to say about this as somebody who went through both the Catholic and the public school system growing up and seeing various different outcomes. All right. Another question. Unions, low quality trust immigration thoughts. Um, I mean, I don't think public unions should have the right to exist because the public sector workers are not negotiating against an equally interested party. Like the government has no incentive to negotiate hard against the unions because those union workers can be voters to get the politicians in office who they're negotiating against. Even progressives like FDR opposed public unions. So I don't think there should be any unions for public state employees, period. On the private sector unions, yeah, they should have a right to exist. They shouldn't have closed shop policy requiring any worker to be part of a union. Like it should be you should be allowed to opt out of union membership if you don't want to be part of it. So like it's kind of like a right to work state in America. But they should have they have a right to exist because the private sector boss who they're negotiating against has a legitimate adversarial incentive to negotiate. Um, So, if as long as you have both equally interested parties negotiating against each other, you can have a union if you want, but you just can't force membership into it or have unions use the government to protect them or unions be involved with not equally interested parties in the case of public unions. So, yeah, that's my kind of my view on them. I generally probably am not the most pro union person, but they do have a right to exist. It's free assembly like anything else. It's just the problem with the like the mid-century unions where a lot of them were politically supported and used what would be considered kind of illegal collusion tactics to keep their workforces in line, which I can't really support that. Um, but back with what I was saying before, I asked the question about unions. Okay, the implications of the raising the poverty floor. So yeah, first it's just the social trust and hit, and basically it's also a national branding issue. Like if you just had a statistic that said, oh, all of a sudden now the poverty rate is actually 25% instead of the 10% that's really kind of commonly published. Um, First of all, the rest of the world is going to perceive America as a third world country, and that is going to discourage international travel. It's going to probably discourage international students from coming to the United States, discourage business being done here. It's going to make people worry about our political system and may do damage to the currency. Like the US dollar is probably going to decline on that kind of reputation. Um, there's a lot of issues with that. Second is that the public will just be confirmed that all the economic data is fake and a lie, and it will erode trust in not necessarily the government because people don't trust the government already. It's more that it's going to erode trust in the sense that, hey, I'm back. Sorry about that. I guess my internet randomly shut out. But what was I going to say? Um, yeah, it would just really kind of hurt the people wouldn't trust the data anymore. And like a lot of Wall Street and a lot of investors make trades based on the jobs data being credible. And doing such a harsh revision like that would kind of really help make it hard for people to use economic data to make good business decisions. So, um, yeah, that's what other implications are to that. The other thing really, if you want to go for the further level, is that which is the main economic cost of this is that social welfare payments are indexed to what the poverty line is, and this is like why I think it's a big problem because right now social spending is already over 60% of government spending, especially if you include Social Security and Medicare and all of that. So if you now had to double the amount of social spending because of these very high poverty rates, and you're going to have a lot more people on Medicaid and a lot more people getting um, other sorts of welfare benefits, then one, the welfare cliff is going to be much higher. So now people won't take a job that if you get enough benefits to live a good life at anybody under 140,000 a year, then it's going to lead a lot less people to try to move up beyond that. It's already causing at the low poverty rates we are now, a giant welfare cliff of people not wanting to get onto the system. So now if it's like the minimum wage to get off of social pay benefits instead of like 30,000 where you or 40,000 where it starts to make sense to work versus being on benefits goes up to say $150,000 a year. Yeah, you're going to basically have a lot of people just opting out of the workforce, and there's going to be a lot of social problems, and that would make this the economic problems and the social problems and the social welfare spending that much higher. Like we cannot afford to take care of that many people on the dependent class. Like it's not a healthy society if the dependent class is more than 25% of the population. Um, in emerging market countries where they just don't have the resource, they just let people live in squalor. But I don't think anybody's watching this wants the United States to be a country like that. And so what you need, so you can't really the same. So you're either going to bankrupt the system, which I think is slowly happening in Europe, or um, you would cause a lot of other economic dislocations and reputational damage to the United States of America. So even if Michael Green is right that the poverty line is off, raising the poverty line would probably make the problem worse, not better. Um, yeah. So next question. Any perspective on the EU and Canadian trade acceleration or the current tariff games are temporary because Canada is changing trade deals rapidly? I don't really know enough about the EU Canadian trade deals to say anything informative about it. I know the US just got its deals done with Europe and more recently Switzerland. And I think that a lot of these trade deals are going to be settled. I think I'm surprised how long Canada is holding out. I think it's that it's very politically popular to take a stand. And also 95%, I think, of trade between the US and Canada is in NAFTA anyway. So they're really just negotiating around the edges. But yeah, I wish I'd been more informed about that. I just don't really have enough to say. But that kind of, let me check if I have any more opening thoughts really to say. No, I think that's really just, though I have one other question that somebody asked me before the live stream, and then I'll get to open Q&A. So feel free to start putting in your questions for open Q&A. I'm going to answer one more pre-scripted topic and then share some news about the channel and the tour, and then we'll get to Q&A. But the last question is, why have sports franchises gone up so much in value in the last 25 years? Like they've gone up considerably more than the S&P 500 in the last decade or so. I think a lot of that has to do with just the growth of the globalization of sports. Like people now in other continents are watching American sports, and Americans are now watching European soccer. And so you've made a market that used to be just your national market to a global one. And then live streaming has also increased the size of TV deals. So I think that has something to do with it. But in general, it's kind of what I call the Linda Isle phenomenon. In my hometown, there's this neighborhood called Linda Isle. It's the most exclusive neighborhood, and there's only 30 houses in it. And like, even if that, and whether you want, if you want to live on Linda Isle, you have to buy one of the 30 houses, and somebody has to be willing to sell it to you. And because there's only 30 houses and the island is a certain size, so you just can't build any more houses on the island. Even if the house is a complete dump and has not been done any maintenance or any repairs for 50 years, as soon as it comes up for sale, people will buy it and pay a premium price because the value of the land of being one of the 30 people to be able to live on this island is worth more than even if you have a bad house. You have the worst house on the island, it means it's the house on the island. It's an example of why teams say like the Pittsburgh Pirates has a high valuation, or for like a basketball equivalent, like, I don't know, the Charlotte Hornets or the New Orleans Pelicans or the Clippers even traded for such a high price. But the Clippers do have a media market going for them. And so that is kind of really, and there's a lot of billionaires who grew up as middle class and upper middle class sports fans who their life dream was to own a team. Like old money never was really into it, but a lot of new money who watched sports as a kid, it's like one of their goals. Like I always thought one of my goals would be to buy the Los Angeles Lakers or the Angels. And I thought maybe one day I would be able to get to a 9-figure net worth and be able to put a bid, but if billions, it's something I've kind of given up on that one, to be quite honest. 10 billion actually is what the Lakers sold for recently. So yeah, I just don't really see it in the cards for me, but you know what? Nevertheless, there's some people who have been able to get to that level, and they are putting their money where their mouth is. And so that's kind of where you have a lot of people who want these teams, and they're not really expanding. Like there hasn't really been any expansion in the NBA since 2004. There hasn't been any in baseball since 1998, I think, and their NFL hasn't had any since 2002. Whereas the NHL has had expansion recently, and I think that probably if I was going to be an investor in sports, I'd want to buy an MLS team because I think soccer, even though I'm not a fan of soccer, is the potential to replace either hockey and or football in the big four within 10 years, especially if the US outperforms expectations in next year's World Cup. And so I expect valuations for those teams to go up quite a bit, especially if they end up increasing their quality of play to be at least semi-competitive with Europe. But that's but if I was a pure business person, I would try to buy one of the New York MLS teams if I was trying to be in the sports business for money. And then but if it was just for a personal passion, I'd want either the Lakers or the Angels. But that's kind of irrelevant to this point. But that's kind of the main reason why sports teams are valuable. It's like you want to be on the island, and even if you have a dumpy house on the island, you still have a house on the island. And the fact that your house is on the island is what makes it worth a lot. And in general, for real estate, like if you want to maximize appreciation, I'm not a real estate investor, so please don't take any of my advice on this. And again, in general, don't take any investment advice because what's it called? You got to do your own research or contact me if you need help with that offline because I can't answer specific investment questions on a live stream. But the point really I was going to make is that you want to buy like the most crummy tear down house in the fanciest neighborhood, especially if you have the money to do renovations for it, because the land value will go up even if you don't do anything to fix that house. And the marginal effort, the cost of upgrading the house is probably cheaper than it is to buy the one that's already pre-built and fully upgraded in the same neighborhood. That's why it's so popular for people to buy tear downs in a lot of high-end neighborhoods and rebuild them. And but yeah, that's kind of my take on sports teams valuations. I mean, do I think they're going to keep going up? Probably not at the same pace because we have global saturation. I think Gen Z is less into sports compared to other generations. And they've hurt their own branding to politicization to a certain degree, or just some of the quality of the games itself. Like the only sport that seems to be better to watch now than 10 years ago is baseball because they changed some of the rules to speed up the pace of play. But a lot of the other sports have basically either destroyed their credibility through the change of the business model, like what's going on with college sports. And I've done several videos on this. If you like more of my comments on the intersection of economics of sports, I recommend watching my economics of sports ball playlist. I've learned to like, even though I've liked sports a lot less than I used to, I really like sports business because it's kind of a fascinating intersection of like a whole separate like economy that runs on different metrics that every other industry does. And yeah, I find it fascinating. You build a community through home ownership. Owners have skin in the community. HDB would increase supply and lower housing. Rent seekers are a problem. Yeah, I agree that rent seekers are a problem. And I think owners do have more skin in the game. But the answer really, if you wanted to make housing more affordable, you don't need to have government build like apartment housing projects. Like people don't want to raise families, especially people who are accustomed to growing up in single family homes in giant HDB style government housing projects. Like why the birth rate is so low in Singapore. It's like one child per woman. It's one of the lowest in the world because partially due to the fact that nobody wants to raise a family in an apartment. And it's just the transient nature of apartment living hurts. Even if you own a condo, it's still not the same kind of community as like a neighborhood of like single family homes where you actually have plots of land. So we really wanted a way to do this is you need to just increase the penalty of rent seeking. And the way you increase the penalty of rent seeking is you increase property taxes. or eliminate things like Prop 13 that artificially lower property taxes. In order to not just do a giant aggregate tax hike on Americans, or you would need, if any increase in property taxes needs to be compensated by an equal decrease in income taxes, because young people's income is young people's tax burden is mostly through income taxes, whereas older people's tax burden is through property tax. And so by having a high income tax like California does and a low property tax, that is a wealth redistribution from younger to older people. And you basically create a gentry of boomers who are able to take advantage of Prop 13 benefits. So like states like Texas and Illinois are probably better models about how to finance a government in the 2020s and beyond, because AI is going to make less jobs and less high paying jobs. And in order to have a more prosperous society, you're not going to be able to do it through increasing incomes. You're going to have to do it through lowering the cost of living. And so I don't think income is going to be a good form of taxation for the next generation. Instead, what you're going to need to do is you need to transfer the tax burden away from wages and business income to assets. And the problem with taxing financial assets is that, one, you would destroy the valuations of the financial markets. People would sell and hoard cash instead. Or two, financial capital is mobile. You can move your stock shares or bonds to other countries. Whereas real estate is not mobile, and you can't really evade property taxes that easily, because somebody owns the land, and if you don't pay the taxes, the property gets taken and sold to somebody who will pay the taxes. So I think property tax is the most fair and efficient way to tax a government. I'm generally not a high tax or a tax person in general, but if you're not going to have an ANCAP society, the government needs to be financed somehow. And I think property tax is probably the most fair way to do it. The main counter argument against this would be like, oh, what about older people who can't afford to live in their homes? Like, one, you need a plan for your retirement to pay for your property taxes. Or two, you can sell it to your kids and they can let you live in it for free or something like that, in order to keep it to keep the property in the family. Or you can stagger the property taxes in a way that unoccupied second homes pay a higher property tax than owner occupied homes. But I just think in general, AI is going to make conventional income taxes less profitable to the government. And so you're going to have to either change it to a consumption tax or like a VAT or something like that, or you're going to have higher property taxes, or both, if you're going to want to balance the government budget in a more sustainable way. So for now, we're going to get to Q&A. But before, I'm going to make some announcements about the Analyzing Finance with Nick tour. I'm excited to announce we have the first 7 stops on the tour already ready to go. The first one we're going to have is in Beverly Hills on January 23rd. And we're going to have one in Newport Beach here in California as well on January 31st. And then I'm going to be going down under to Australia, where I'm going to be having events both in the Gold Coast and Surfers Paradise specifically on February 7th, and in Sydney on February 13th. Something I'm doing a little bit differently in this tour compared to last tours. I'm going to have my normal speaking events, but I'm also going to have curated experiences, which are either private dinners or like exclusive events for like a small group of people, usually like 8 to 10 people, where you can have a more private interaction and have a high-end meal and a very interesting, more interactive dialogue. And I'm going to be doing those in most of the cities that I also have my regular events. And if you're interested in joining me for one of the curated experiences, you can fill out the application linked both in the description and I'm about to post in the chat. I need to have you guys fill out an application, because if I'm going to have like a private event and spend a whole a long evening with you guys, I need to kind of know who's coming and know a little more about you to help create a good audience for everybody and organize the conversation. How much for 60 minutes with Nick? Well, I do have consulting calls. If you want those on Calendly, and you can schedule one of those with me, or you can come to one of my events and meet me in person. Once I get back from Australia, we're going to have 2 events in Florida, one in Tampa on Thursday, February 27th. I'm thinking about whether to do the curated dinner in Tampa core or St. Petersburg. I've never been to Tampa Bay. It's one of the few metropolitan areas in America I've yet to visit, but I know it's one of my low-key, more popular markets. And it's, I think, my second most popular city in the Southeast U.S., only to like the Miami area. And I would like to have any insights on recommendations on where to host a meetup in Tampa, or like all of that. So that would be helpful to me. And then I'm going to have a meetup in the Saturday, February 28th in Palm Beach, Florida. So if I'm going to be doing the South Florida meetup a little bit north, and last time I did it down in Miami, and this time we're going to do it up in Palm Beach. And then the last one that we have on the calendar as of now is Scottsdale, Arizona on April 18th, where we're going to have a normal meetup and also a special baseball focused curated experience. I'd love to see all of you guys on the tour. Other cities, I don't have everything lined up yet, and the Eventbrite page is ready, but that we're going to have meetups the first half of 26 include San Francisco, Fresno, Toronto, Atlanta, New York, and most likely Boston. So, and then we are going to come to Texas, as I'm talking about Dallas, but it will be in the second half of 2026. 2026 is going to be mostly US and Asia Pacific, and I'm going to do Europe and South America in 2027 for the tour. So that's kind of my announcement on the tour. And then we have other things that if you want, we have our membership. Like I did a recent video about the Cult of Equality that you can watch early as part of members, and they also are special members only stuff. And why not Vancouver? Well, there's not enough of you guys in Vancouver who want me to come. Like I'm going to have a meetup in Seattle, probably in July or August, because I like to go in Seattle when it's not raining. And I'm going to have one in Toronto and probably in Montreal. If I haven't mentioned your city, or if I have mentioned your city and you want to vote to make sure that you get notified when I'm going to be coming to your city, please vote in the form I just sent in the chat. If you fill out this form, you can vote on where I go all over the world. You can select whatever cities you're interested in attending. And then if you want to go to the curated experiences, I'll post that link again too, if you're interested in coming to our more specialty curated events. So I'd love to see as many of you as you can on the tour. It's been, last year's tour was fantastic. We went to 23 cities, all in 5 different countries, and I look forward to doing it again in 2026 and 2027 because it's going to be a longer one. But now with like the announcements out of the way, let's get to your questions. So I'm going to scroll up and read some of the live chats. If you want yours to be priority, please leave a super chat. And also just what your thoughts on how do you guys like when I do these more longer lectures first and then Q&A versus straight Q&A. And what are my suggestions for the 100,000 subscriber special, which hopefully we can have by the end of the year, but it's most likely going to be in January. Let's see. Let's see if yeah, it seems like it's not showing some of the older questions. The older comments on here. So I don't know if I can read them all. But yeah, I'm just trying to find questions. I'm going to get a sip of water. No Melbourne. No, I'm not going to be able to make it to Melbourne. I see Sydney's the closest I'm going to be. So Yeah, that's maybe next time I go to Australia. I've never been, so I'm looking forward to it. Do you think that getting a finance or economics degree is going to be worthless after AI improves? No, I do not think it will be worthless because um, a lot of the grunt level analyst jobs are going to be replaced, unfortunately. Like as somebody who does run a financial firm, thanks to things like LLMs, I can do a lot more research myself and with my team of principals than I would have without a junior analyst a long time ago. And it can basically will delay the time that I'll need to hire one. And it's not just me who's thinking that way. And this is going to cause possibly a real problem because there's going to be um, a lot of companies that are at risk of not having a future if they never train young people because it doesn't make sense because the AI. But then once they're too old to do their jobs, who's going to do them? So I think this you still need the fundamental knowledge of a finance or economics degree, but you might have to be more entrepreneurial in the beginning of your career to sharpen your skills to come in as an experienced hire later. Um, or what I think is going to happen is like big companies who have the resources still to train people, like the big banks or the giant corporate sized RAAs, will be like the training grounds. And once the young employees get too expensive for those companies to keep and maintain their margins, then they will go to smaller firms and utilize their skill sets. But yeah, you still AI does a lot of errors. The hallucination rate is still high, and even if it can do a lot of the stuff perfectly, the the market isn't just a purely analytical thing. There's a lot of human drivers, a lot of non-economic buying and selling, and that creates a lot of inefficiencies. And you need to have the critical thinking skills plus the core knowledge to see where there are mislocations and be able to identify those or identify possible risks or for something that investment that might look good on paper to the AI or vice versa. Something that looks bad on paper to the AI might actually be a great investment. There's there's still a lot of and also a lot of finance is going to be more client facing and a lot like think about it. If you are somebody with a sizable fortune, like let's say $5 million or more, do you really want to leave the fate of your wealth to an LLM? I mean, I think the stakes are high enough. People want a human or somebody who actually cares about their best interest from more of like from the heart level, more than just purely rational analytic level that a machine can do, and have a fiduciary who's truly working in your interest and looking out for you. Whereas the AI doesn't really have that kind of empathy, for a lack of a better term. And so that's why I think there still is a role for finance and economics majors. And the thing is, in general, like I think AI and robots are going to be do a lot of the lower scale type of work or smaller or clients that are previously considered too small to be profitable for highly paid professionals. And people will have to do the bigger and more complex issues. And this applies to like small claims cases will probably just be done by AI, where you hire a law firm for like $100 million M&A deal, or you can use an AI bot to manage your $10,000 portfolio, but you hire an RIA like Spearhead to manage your $1 million portfolio. Like, so that's kind of where I think the answer to that question is. Um, Please do a video on the Canadian economy and classes. I've done a video about the Canadian economy already. It's called The Economic Future of Canada. I released it in, I think, December of 2023. And even though you've had some electoral changes since then, the fundamental structure of Canada trying to build a rentier society without enough of an economic base to support it is still a real issue in Canada. Um, and the Canadian class structure is similar to the European class structure. It's like I put it, if I had to say, it's like 80% European, 20% American. It's not very much social mobility in Canada compared to the United States, given the way that their government and their society is structured. But I don't know. Maybe it might be worth its own video eventually. Um, are you coming to the Gold Coast or a Scam AI? Oh, I'm definitely coming to the Gold Coast. I did cancel doing a bonus curate experience. I was going to rent out a boat for a few people, but planning the logistics for something like that on the other side of the Pacific Ocean was a little bit daunting. So unless if I have a local friend who can help me set up the boating outing, I think I'm just going to cancel that. But I'm still going to have a regular event though on the Gold Coast. Um, let's see. Um, Hey Nick, thoughts on the Laffer curve? If you believe in it, where do you think the U.S. is on the Laffer curve? Do you think the best interest of regular people is to maximize tax revenue? I think there is some truth to the Laffer curve, um, like because if you tax people too high, they stop working or they repatriate. And we've seen this when countries pass ridiculously high income taxes or wealth tax. Look at France under Francois Hollande as a good example of this. So I do think it's real. The question is really what's the right level? And it's you can't really you don't know until you test it. And so there's not enough history of tax revenues to like at various different rates to see what is actually the right level. But there's a corollary, which I did a video about. And since I'm mentioning so many of my other videos, I think I'm going to start just posting these into the chat when I refer to them. But it's about, I did call it Hauser's Law, which is the idea that no matter what the tax rate is for income, the US still is going to collect about 20% of GDP in taxes, or 18%, I think is the actual number. Whether the tax rate was 90% or the top tax rate was 25%, they still got their same 18% in GDP. Like, and I don't think income tax is a very efficient tax at all. It's more of a social class resentment like policy. It's designed to manage the envy of people who just don't like seeing people get richer than they are. Like if you actually are trying to maximize tax revenue, you would tax something that requires a lot less regulation to collect and is a lot more difficult to evade, which would be either a consumption tax or property taxes. And that I wonder what what is the Laffer curve limit for property taxes? I think that's probably the ideal scenario. And you do want to maximize revenue because you don't want to overly tax people just for um, social justice purposes. That just leads to, again, a lot of other negative economic externalities. Okay, I agree, but there's more to life than owning a house. Cash rich over house poor, but a paid house off house is a blessing. Everyone is different. Yeah, I'm not saying that it's not worth buying a house. I think it is if you pay the right price for it and it's the product of you accomplishing other goals. I'm just against the idea that, which I see common along a lot of Gen Zers particularly, but also a lot of YouTube people saying like, "Oh, my only goal in life is to have a house. I feel like my life is meaningless if I don't own a piece of a land with a few wooden planks and concrete on it." No, like the house is a product of your own success. Like if you build the plants if you plant your flag in your community, you pursue some greater ambition or goal, you will have the ability to acquire a house in some way, shape, or form. Um, it's just just don't think it should be a byproduct of your success more than the actual goal. Um, yeah. Let's see. Another question. Um, so what do you think of living in Ireland for building wealth? I mean, it's just Ireland's taxes are mainly low corporate taxes that companies place their European headquarters there, like large multinationals. I mean, Ireland's individual tax rates are pretty in line with the rest of Europe. They're not particularly cheap. And Ireland has a relatively high cost of living relative to its actual wages. The GDP per capita is a little misleading for Ireland because um, a lot of that is just repatriated money and it's not actually individuals in Ireland who are collecting that. So, yeah, I mean, I would say like living in Ireland would be, if you want to live there for personal reasons or if you find a really good job opportunity, it's probably the same as living in any other continental European country. Um, like if I wouldn't really go there specifically to build wealth. I'll do eventually a video about the economic future of Ireland. Like I have a whole playlist called Economic Futures where I break down like the economic futures of various countries. I've done it for like 20, I think 7 or 28 countries now. But my new policy on that is I will make those videos whenever I visit that country, or I'm going to expand to US states too. I've done it for Arizona, Massachusetts, Hawaii, and California. And so whenever I visit one of these places, I will make a video covering my thoughts on the economic outlook so I can have some live on scene footage. And also, you guys tend not to like those videos as much based on the view count. Great wisdom. Thanks. Yeah. Let's see. Are rich people moving out of New York City? I've been hearing that my entire life because of high taxes, but CNC wrote there are more millionaires in New York City than ever before. Well, I mean, there are more millionaires in New York City because inflation has lowered the bar to how much real wealth is a millionaire. Like a millionaire in 2025 is not the same as a millionaire in 1965. That's kind of the first kind of misleading thing with that statistic. Like simply like owning an apartment in New York, you are a millionaire, especially in Manhattan. So yeah, that's probably why there's more millionaires, because there's more people. Any homeowner now is a millionaire. Second, you do see a lot of high net worth individuals and smaller, more boutique financial firms are moving out. And even the bigger banks are relocating a lot of their staff to other cities, not just because of high taxes, but also because they can hire employees for a lot cheaper in other cities because the cost of living is lower. Like Goldman Sachs has moved a lot of its back office operations to Salt Lake and Jacksonville because the same back office operations salary in Jacksonville goes a lot farther than in New York. And so Goldman saves money by paying people less, but the workers are happier because their quality of life is higher than if they had to live in a more expensive city. Same with JP Morgan. Like they have now more employees in Texas than they do in New York, even though their headquarters is technically in New York. Wells Fargo moved out of San Francisco to Charlotte. Bank of America moved out of San Francisco to Charlotte. There's Charles Schwab moved out of San Francisco to Dallas. So there are a lot of these big financial institutions are moving out, and with that, a lot of the high net worth individuals are moving out too because the taxes are high and the cost of living is very high. New York is kind of a place now for young people either to go to college because there are good universities there, or to gain their first few years of work experience to build on their resume. And once they've built up enough credibility in your career in New York, or have had like enjoyed the lifestyle, because New York is, especially if you don't mind cold weather, is a fun place to live. I wouldn't live there because I really don't like cold weather, and I'd rather have more money in my pocket and a higher quality of life on the West Coast. But the people do, they get their experience, they get tired of it, and they're like, oh, I want to actually start getting ahead. And so then they take their skills and their resume and their prestige they gain from moving to New York to their hometown or some other city, and then they start building wealth that way. So yeah, I think people are moving out of New York. And then there's a lot of people who are very rich, usually like the heirs, second generation, third generation of people who've made money in other parts of the country or internationally, and they live in New York as just kind of a place to have fun, even if they didn't make their money necessarily in New York. So that's kind of my answer to that question. The migration is real, but the increase in real estate wealth and people who've already made their money moving to New York just to have fun and spend money kind of washes it out a little bit. Please make a video about Australia. I've been thinking about moving there. I am an electrician in Massachusetts. Australia seems more stable. I mean, I did make a video about Australia as part of my economic future series, but it was a while ago. I released it back in October of 2022. And I think I will record an update when I go to Australia. And Australia kind of has a problem. It's very high cost of living, particularly housing, but the wages are way lower than in the United States. So Yeah, I think it's like American level housing prices, but not American level wages. And it's the same issue with Canada to a certain degree. They're very similar. However, I'm a little bit more optimistic about Australia's trajectory long run than Canada's for a variety of reasons that I'll talk about another time. Where do you think would be the best place in the world to become a farmer? Um, I mean, it's. I mean, the places to be a farmer are places where Um, you can get reasonably affordable land. You have abundant water supply, and you have access to infrastructure that can ship your commodity out into the global market. And so, generally, the places then to be a farmer would be the temperate parts of Australia, the U.S. and Canada are probably the best places to be farmers statistically. Um, and if I mean, and but again, it depends on farm and also like other places that are good for growing crops or ranches or things like that are like the southern cone of South America, like southern Brazil, Argentina, Uruguay, etc. And then there's some parts in Western Europe, but um, I don't really think you should go out and move to a random part of the world to start a farm. You can buy if you want to invest in farmland, there are other ways you can do it as a more passive partner or like an LP. There's and like if you wanted to, and also because you have to look again, and farming is not that profitable without government subsidies because it's a commodity and you can grow it wherever. Like this, look what happened with the Ukraine war. Um, you had wheat and corn prices spike up a lot, but they came down really quick. I literally made a video debunking the doomer about a global food shortage triggered by Ukraine because all that supply got taken out, and within a year, it was back because other farmers in other places in the world just doubled up. And because grains can be grown relatively quickly and they can change their sizes with demand, um, grain prices generally revert to the cost of production. So you need to own a very large scale farm, like corporate size with large economies of scale if you expect to make money in farming. Um, so it's not something you start like, it's not like we're not in the homesteading era anymore. Um, does the Schiller PE ratio still apply today given the changes in industry? Um, yeah. Um, I think it does, but evaluation is a long-term indicator that you might not be the best time to buy something if it's high or a great time if it's low, but it's a lagging indicator until it affects year-to-year performance. Like you can have a good year in the stock market even if valuation is high. So I don't think making investment decisions solely on Schiller PE is a good idea. All right. Do you see Fed cutting rates at the end of QT increase liquidity as a good tide for risk assets? I think it could potentially be a double-edged sword. I think in the short term, it's probably good for risk assets, but in the long term, especially since inflation hasn't all gone back down below the 2% threshold, there's a real risk, especially if the market perceives the Fed cuts as being politically driven, that you could have inflation spike, particularly because a lot of the surge of money that comes into the system through easing policy goes into housing, which is the cause of 41% of inflation because it's 41% of the core CPI basket. And so, yeah, it's just depends on how much of it goes into the parts of the economy that trigger inflation or not. I don't think we have the deflationary overhang of the post '08 world like when the previous QE happened. So I don't think the outcome of lowering rates is going to be as rosy as the president hopes it is. Thoughts on Kevin Hassett? I would prefer if they picked Warsh personally. I tend to be, and I like what Powell's doing for the most part. I generally somebody who favors higher interest rates and tighter monetary policy if I had to make an error. Um, I think that the asset bubbles and inflation created by ultra loose monetary policy and also the basically giving people a get out of jail free card for loose fiscal policy is something I generally can't get behind. And I think that Hassett is going to probably be too. I'm afraid he might be too dovish for his own good, and it also risks things for the independents. But yeah, I mean, who knows? He could be a great Fed chair, but that's kind of my first perspective. It depends how if he's independent and he runs the Fed like the track record of his resume, I think he'd be great. But if he's basically just gonna lower rates to whatever Trump wants them to be and not think for himself, that's a problem. I think tariffs are the save all for the U.S. Um, no, I don't really think so. Um, I think that our choice really in the last election, I talked about this when I covered the tariffs earlier this year, was between um, tariffs and or raising income taxes to more European levels. Like if the election went the other way, we would have seen a major spike in income taxes, which would have been more painful for the economy and than any tariffs would be. And that so if I had to choose between tariffs and higher income taxes, I would choose tariffs, but I don't honestly like either one. How should I homeless proof myself? Any rules? Um, what do you mean by homeless proof yourself? Just um, I mean, you do need to just basically have a good paying job, save enough that you have at least 3 months, 6 months of living expenses. If you plan on becoming self employed, maybe make that 2 to 3 years of living expenses. And then um, you have, and then really you just need to eventually have your income diversified away from corporate Canada, for a lack of a better term, whether through your own business or through investments. And yeah, it's a lifelong journey. And then also planting your flag in the community and making yourself valuable and indispensable so that you are resilient to any shocks in the job market. Um, what's it called? Do you think JD Vance and Erica Kirk have a thing going on? I think that the rumors are funny. Um, I think it would be a disaster for Vance if he were to um, pursue that, because I think that leaving his wife is going to do a lot more political damage than any gains from aligning the MAGA youth with him through that marriage. So I don't think it's going to happen. I think the more likely thing, if JD Vance wants to use his personal relationships to advance his political career, is you see his wife get baptized in the Catholic Church. I think that'd also be a much better political move for him as well. Um, let's see. Um, thoughts on Volcker, Greenspan, and Bernanke. Volcker did what he needed to do. He killed the 70s inflation, and he was willing to accept economic pain for a longer term, better outcome. I think he was a great Fed chair. Greenspan, I think he was, he did manage the Great Moderation, which was a fairly good time economically, but I think he held the rate too low for too long in after the .com bust. Like and that's what created the housing bubble and ultimately led to 08 to a certain degree. So I mean, like pre 2000 to Greenspan, I think did a pretty good job. Post 2000 Greenspan, not so much. Bernanke is the QE guy, and I'm not really a fan of Bernanke for a variety of reasons. So, is the Fed put real? It depends. If the Fed put is real, if the inflation genie doesn't fight back against it. So if you have a disinflationary environment, then the Fed put is real. But if you have the threat of inflation, it basically cancels it out. What's it called? If you were starting a business in 2026, what industries would you get into? How would you utilize AI? I mean, I'd probably start a financial company because that's kind of what my core expertise is. You should not really try to chase industry fads really to start a business. You should start a business based on what your actual aptitudes are and find what groups need them. But I think like if you wanted to just like hypothetically do it, I mean, I would try to start a robotics manufacturing company or like making some sort, because I think that the humanoid robots or just robots in general are going to become the AI of the physical world and AI of the trades. And it's very underlooked and underappreciated. Or a business that does repairs for that, or maybe an E&O insurance firm that specializes in covering cases related to AI hallucinations. Um, or like somebody who like a consulting practice that helps companies implement AI in a way that's actually efficient. Because right now companies are just AI, they're just implementing this AI blindly and basically thinking, oh, we can just fire everybody and figure out how to replace them later. And I don't think that's going to really work out. It needs to be implemented in a more intelligent way. Um, yeah, those are some ideas. I think that also just um, like building software packages through AI models that are designed specifically to replace a particular line of work. Like, say, for example, you are a CPA and you know enough about accounting to be able to build an AI LLM that can replace like a junior level CPA. So small CPA practices don't need to hire a second accountant or an assistant. And you can make a lot of money probably doing that. Um, why not let the market decide the interest rates and fire all the Federal Reserve? I mean, in a perfect world, that doesn't sound like a terrible idea at all. The problem is that if you fired the Federal Reserve in the current environment, it wouldn't be replaced by the market. It would be replaced by either the executive branch or Congress. And I trust an independent central bank more than I trust the Congress or the executive branch to run monetary policy. Do you think e-commerce is a long-term business model? Yeah, I mean, e-commerce is always going to be a thing. Will e-commerce continue to deliver abnormally high economic growth? No, because it's been saturated. But I don't see e-commerce going away and everybody going back to mom and pop stores. Um, yeah, let's see. What do you think is limiting the number of houses someone can own in order to put more houses on the market and try to lower prices? Is that possible or could it be catastrophic? I mean, there are certain ways you can do that and on the edges. Um, I mean, the obvious answer would be to ban foreigners from owning real estate. But the problem really with doing that is that America has built its reputation on being a safe place for foreign capital. And by doing blanket bans on foreign real estate that and other economic populist type measures like that, you would be scaring away foreign capital, which you really don't want to do if you want a dynamic, growing economy. Like all of our technology development needs to be financed somehow. The other thing too is, but the thing is, you can do it along on the edges. Like to say, like, look, if you made your money in a way that would be considered a crime in the United States, you shouldn't be allowed to buy a home in the United States or real estate. So, like, if, for example, if oligarchs who made their money through corruption would be banned, I could get behind that, and I don't think that would erode the trust in foreign investors who are doing it legitimately. You don't like so that's or like that would be kind of a thing you do is you could have higher property tax rates for unoccupied homes. Um, and that's the existence of a property tax in general is what prevents unoccupied homes for the most part because there's a real carry cost. Like every year, you're gonna have to pay out in order to hold this property if nobody's using it. The ROI doesn't make sense. That's why most houses are either used as vacation homes or as rentals. There's not that many just completely empty second homes out on the market just because of the implicit carry costs of that. So I don't really think you should do a ban on second homes or outright foreigners, but you should ban it on people who do not go through the normal KYC or would qualify to buy a home legally in this country. You shouldn't be able to, like, I think that's a fair compromise on that. And I also think that you can be creative with other ways. And I think the other thing too is expanding supply. You need to allow more development. Like there's too many environmentalists or NIMBY restrictions on development, which I think is the bigger problem. And you don't need to turn every city into Manhattan. You just need to increase the units by maybe 5 to 10% in most cities to clear a market. And I think and then the problem is that you can't just build more apartments. That's also the problem. A lot of the home building incentives are designed mainly for apartments and not for single family homes, where the real shortage is not in apartments, it's in single family homes. And if you want to fix all this, like the stake in the game and people having kids and stuff, we need to have more 3-bedroom plus 2,000 square foot plus buildings, whether single family homes or large apartments that have large units. Like if density is a problem, there's really running out of space. We should be not building shoebox studio apartments everywhere, even though they make the most money on paper. You need to try to find incentivize to build larger units, even in condos and high rises. Yeah. Thoughts on the other AF with Nick Fuentes? I'm not a fan of his. If you want to know my full opinion on why, come to one of my meetups in person. Let's see. Next question. Does the Swiss tax on real estate sales more than other countries? I don't really know about like stamp taxes or the property transaction taxes in Switzerland enough to know. If you had to invest $10,000 today as a young person, how would you invest and why? Well, I would invest it mainly in yourself, like giving yourself the education or skills or networking opportunities that will help you advance your career if you're like if you're young. And if you've already done all of those things, then I would just put it in a diversified portfolio until my investments are large enough that it makes sense to get more specific. Why am I so tight about Mondami? I already talked about Mondami for over 2 hours, almost 4 hours in the last live stream, so watch that one. Let's see. Yeah, let's see. My sister told me that rent controls could fix the housing market in my city. Am I going crazy? No, rent controls would make it worse. Rent controls have been tried in a lot of American cities, San Francisco, San Diego, New York, Santa Monica, and all they do is they allow people who've lived in a place a long time to stay in a place that they otherwise wouldn't be able to afford. But for those but at the expense is that the market rate for the remaining supply that is not taken off the market by people permanently staying in the same place due to rent control becomes egregiously high. Like when Buenos Aires, for example, after Milei got elected, got rid of their rent control, rents dropped 40% relatively overnight. So that is my take on what's it called? The rent controls. Rent controls basically help people who've lived in a city a long time, but at the exchange of the dynamism of the city to make it unaffordable for anybody to move there, and on the margin make the city more expensive than it needs to be otherwise, especially since these big cities are mostly transient people who aren't staying there for long periods of time. Am I favorite ending the Fed? Yeah, I'd be favorite ending the Fed if it was replaced by like a more market-based system or a hard gold standard, but would I end the Fed and replace it with direct political involvement? Absolutely not. Should we bring back Doge? I mean, yeah, I don't really know if it ever went away, but I mean, it didn't do that well, but it could do better. Would you double down on trying to grow 160K per year realtor career or focus on growing a specialty merchant services payment company? I need to know more about your situation specifically. If you want to talk more, feel free to schedule a call with me or a consultation. But like I don't have enough information to answer that properly. Thoughts on Palantir? I don't really follow Palantir that closely. It's kind of a black box to a certain degree. Yeah, I mean, there's a lot of people with a lot of crazy ideas, so I can't really assess every billionaire's crazy idea, and that's not kind of the ones who outsource it to the WEF to say it for them. If everyone's goal is financial independence and no one's actually producing any goods and services, then how wouldn't that crash the economy? Well, savings doesn't crash the economy because savings are used to finance investments. Like that's what the banking system's job is in a free market economy. Like you put your money in the bank will lend it to a business, or um, to basically start their company up or to finance growth. And then then the gains from that economic growth are used to pay back the interest of the bank and therefore pay the interest of the depositors in the bank. So like if everybody's saving, that means there's more capital available for developing the economy, which means interest rates would go down because there's more money available to be lent than there are people who will borrow. And whatever, the market set the right level for that, and that's how you get the economy to grow essentially. Yeah, I mean, so it's just that's why people saving money is like there's the paradox of thrift, which is the idea if everybody stopped spending, the economy would collapse. But realistically, people aren't going to all stop spending. People still want to live their lives and need base things for cost of living or want to enjoy some of the moments now. Not everybody's going to live like a fire advocate for their entire lives. That's just not how humanity is constructed. Is it fair to the U.S. needs consumerism and consumer debt in order to keep chugging along? Maybe to prevent a recession, but I mean, there always will be a need for some consumption, but you don't need to have consumption grow above incomes. That's unsustainable and will lead to a worse problem in the long run than if you just had a recession to fix the imbalances there. Let's see. As a 29-year-old feel existential angst about my finances, do you have any recommendations? What's it called? Do you predict? Let's see. I think what you really have to say about this is, if you have a solid financial plan of what you're going to do, that will help you feel reduce your anxiety. And the thing is that a lot of financial goals that people have, whether it's retirement, whether it is saving up to buy a house, or other things that they want to do in life, they're usually a lot more attainable than people believe that they are. Like the media has gaslighted a lot of us to believe that basically everything is unaffordable, and without the government subsidizing your lifestyle, you'll always be in poverty. And that's not really true. Like retirement is viable if you save a reasonable amount of money every month through your working years on average. There'll be ups and downs because life happens. But you can, if you save like I'm going to do a video about this in January where I go into the hard numbers on it. But if you save a relatively modest amount, you can get to a retirement of your pre-retirement income level in a reasonable amount of time. So once you have all these numbers on paper and you kind of have a plan of what you need to do to get where, I think you'll feel a lot more comfortable. So yeah, that's kind of my take on that. Yeah. What's it called? Do I believe in God? Yes, I do. I am a practicing Roman Catholic. I've said that several times on this channel and live streams. Is this channel a right-wing channel? It's not really explicitly a political channel. I mean, I'll say my political views on stuff when they are aligned with what I'm talking about, but I'm not really trying to endorse specific political candidates or be like a Rush Limbaugh or a Ben Shapiro type figure. This is more of like an educational finance and economics channel, and also going to big picture philosophical issues. I'm trying to have a higher level of discourse than like a generic political oriented YouTube channel. Is this worth is it worth doing a bachelor's degree after 30 years old? The answer is depending on what's your plan. Um, do you have a clear use of it? If you do, and the payoff makes sense, yeah, it's not really too late to finish an education. But if you're just doing it just to check it off the box and have no real reason to, you need to think about why first. I'm going to probably do about 15 to 20 more minutes of questions, but in the meantime, my throat's drying up, so I need to drink some water, and I will then get back to it. Okay. Let's see. Do you think that illegal immigrants are pushing wages down, especially for basic jobs? For example, construction and the service industry. How do immigrants affect the economy positively or negatively? I did a video about this in January called Economics of Immigration, which I just posted in the links. That goes in the deal, but generally, migration lowers wages. And basically, the wages kind of work the reverse that of trickle down economics. It's trickle up um, wage scale, where basically the wage scale is based on like a premium above what the lowest person is willing to work at. So if you have people willing to work at a lower wage than what previously were, that's going to lower everybody else's. And if the bottom wages go up, it raises everybody else's because a higher skilled person wants to work at a set premium to what the lowest wage is. So say for example, if the floor wage and the market clearing wage went up from $10 to $20 an hour. So the person who's previously making $15 an hour, who's about 50% more valuable skills based on what they're paid, they're like, wait, if my skill is 15% more valuable than the minimum, I'm not going to work for below the market clearing wage at my $15 an hour. I'm not going to also, I'll take an easier job at the minimum wage, unless if I'm getting paid commiserably to reflect my more difficult, high skill job. And so as a result, reducing labor supply has a trickle up effect on wages. And that $15 an hour person is probably going to now make $30 an hour. So, but for the longer take on that, watch my my video. There are economic benefits to immigration, and there are economic drawbacks to immigration. Do you think the dollar will lose its rank as the world's primary reserve currency in our lifetime? Probably not, unless if some other country comes with a hard gold-backed currency to replace it. Do you expect inflation to skyrocket in 2026? I think it's very possible, but it's not my base case. Let's see. What are your thoughts on computer and hardware engineering as a safeguard for future-proofing AI? I thought I have a first degree in math and second degree complete computer engineering. Yeah, I think there's going to be a role for that, especially if it requires precision that cannot be done easily by a robot. But I think there'll be a lot of opportunities to build these very robots or repair them or keep everything that keeps the AI running. So probably should do well. Let's see. I've got about 10 more minutes of questions. And then I'm going to log off because I'm losing my voice and I need to eat. If you weren't here earlier, I'm just going to give you guys a reminder. We're close to 100,000. So if you could spread the word, help us get over 100K by Christmas, that would be appreciated. If you want to have my full reading list and just follow me off this platform, I have a Substack called Nick's Present Value, and I just posted the link for it here. I'm also doing my tour. I'm going to have stops in Australia, in the Gold Coast, and in Sydney on February 7th and February 13th. I look forward to seeing all of you guys there. I'm also going to be having 2 Southern California stops in Newport Beach and Beverly Hills on January 31st for Newport, and for Beverly Hills on January 23rd. I am also going to have private curated experiences, which is like a private dinner or some more exclusive like social event and conversation for people who are interested in those things. If you'd like to join us for these curated experiences, feel free to apply in the form that I'm attaching linked below. And then we're also having events in Florida in February, one in Tampa on the 26th, and one in Palm Beach on the 28th. And then last but not least, I will be going to Scottsdale, Arizona on the weekend of April 18th. And if you want to contact me directly for your questions about markets or your portfolios or really anything like that, feel free to have a consultation with me. But now I'm going to wrap up really the questions. All right, let's see. Will the USA become a dictatorship in the coming years? I think democracy is at risk in all of the Western world. And I think it's a byproduct of the fundamental economic problems that are structural that no major party is willing to deal with effectively. So the answer is, I think the risk is higher than it has been in the entire history of the United States. I don't think it'll be President Trump who does it. He's too old and he's not politically effective enough, even if he wanted to. But I think that the bigger risk is that you might just have like the old Greek tyrannical system where you have somebody with dictatorial powers as president, but they get thrown out every 4 years. So you'd still have the peaceful transfer of power, but you'd have more power monopolized with the presidency. And the key to deflating populism is you need to have economic prosperity. You need to have people have skin in the game again. And you need to have real reforms that really fix the problem that the cost of living is higher than the median wage. And until you do that, you're going to get more radical populism on both sides of the aisle. Any events in San Diego? We just did one in October. And that was my last. And I usually I think I'm going to do the last meetup of the year. So it'll probably be again in September or October. I'll come back to San Diego. I love San Diego. It's my home away from home. I think it's a good way to have a relaxing end of the tour. So I'm going to save San Diego the best for last. Let's plan another meetup in Chicago. We might be able to make our offices available in the loop. Well, keep in touch with me. Feel free to email me directly to help me set up logistics for that. I am going to come to Chicago. It will likely be in the summer, in the second, like July or August. I'm going to probably go to Chicago along with some other Midwestern cities, like possibly Kansas City, Minneapolis, Milwaukee, Louisville, and Indianapolis are all under consideration. But the only one that I know I'm going to go to for sure is Chicago. And that will be in the early second half of 2026. I don't want to go when it's cold. Let's see. Yeah. Should I, as a young person, root for a stock market crash? Yes, you should. Assuming you can keep your income source, a stock market crash, if you're under 40 years old, might be the best thing to happen for your financial future because it'll allow you to invest your prime year earning years at much lower valuations than we have right now. And you'll have plenty of time for the market to recover. And historically in bear markets, it takes about twice as long for the market to recover as the length of the crash. So if we had a bear market that lasts a year, the market will come back with usually about, on average, and there's no guarantee because markets are markets. And there's certain countries like Japan where it took 30 years to come back. But in the United States, historically, it takes if a 1 year bear market takes about 2 years to recover. But Yeah. Is inflation making retirement savings accounts obsolete? No, unless if you just keep them in treasuries the whole time. If you invest them, you can um, help kind of buffer the risk of inflation by um, having compounded returns on your investments and investing in things that are more resistant to inflation. Um, so no, it doesn't. In fact, in the era of retirement, higher inflation, it's actually probably more important to save for retirement. It's just that you might need to allocate your investments a little bit differently because stuff that performs well in an inflationary market per, is different than what performs in a more deflationary or low inflation market. Um, let's see. What do you think would cause a crash to happen? It'd just be an economic recession. It's really simple as that. Um, or a potential fiscal crisis. But yeah, I think the main thing would just be an economic recession. Um, would be the thing to cause a stock market crash. And there could be a number of things that could cause an economic recession. Um, what is your base case for the next decade? I would say higher inflation than the previous decade. Um, I think you're going to have the ending of what I call like the fourth turning of the US economy. And I think that in general, the world in 2030 will be a much better place than it is now. I think you'll start to see real incomes for younger people can start to actually meaningfully improve. And I think things will start to get more affordable. You might not see it in nominal prices because you might just have inflation be higher and wages go up with inflation, but things like houses and stocks not go up as fast as inflation. I've already started to see it with college. Like the enrollment cliff is causing tuitions, particularly at private schools, to drop or just not go up as fast as inflation. And I think it will spread to other corners of the economy too. But yeah, I think you'll have a little bit. We're gonna have at least one mild recession in the next couple of years, and then once you're out of that, I think it's kind of off to the races. I think that AI and robotics are going to result in like a new industrial revolution that's going to lead to a lot of positive outcomes. Watch my video I did with Chris Street about the economic future of the US for more details on that. I also think that the US dollar is likely to weaken against other countries' currencies for a variety of reasons. And watch my video about the history of the US dollar for my full thesis on that. Um, do you think countries like Australia, Canada, and the UK are heading towards stagflation? Definitely. Well, for the UK, I think that's already happening. Um, I think they are probably one of the worst, relative worst shape. It's just mainly the countries that have a giant welfare state and a lack of innovation or um, like entrepreneurship cultures are going to be the ones that are most at risk of stagflation because they're going to need to print money to cover their welfare states, but they're not going to have the productive capacity to absorb it. So, yeah, I think continental Europe and the UK and Canada, I think, are at risk for something like that more so than, say, the United States. I think that a long term bear market is less common today than the past. Um, I don't think so. I mean, we did have like a really long bull market from 2009 to 2020 um, due to a variety of factors. And I think the Fed was able to keep the party going because the inflation threat wasn't there. But I think you're going to have your normal business cycles. Like you have a recession every five, like 5 to 7 years. I just because sometimes the in a bear market about like maybe once every 3 to 4 years, and just because you didn't have one for a long time, we've had two in the last 5 years, 2020 and 2022, and arguably even earlier this year with the tariff crash, we didn't get quite to bear market territory, but we got pretty close. So yeah, um, let's see. You often say proximity to institutional power bears on class. What if someone is near institutional power but made their wealth in the counter elite, i.e., McKinsey consultant leaves and starts a business? Well, I mean, if the McKinsey consultant leaves, they often lose their connections to the institutional class. So they are outside the system essentially at that point. So yeah, I mean, that's still a counter elite track overall. It's about your relationship to money and how you earn it. Like, unless if you're starting like a particular practice, like say you start a consulting practice to help only like a certain few establishment elite contacts. Like, say, for example, you're the doctor of all the old money families, or you're the mergers and acquisition lawyers for big banks only. But I mean, not really big banks because banks could do that themselves, but whatever, some big establishment industry, then maybe you would stay in the establishment track. But generally, if you're going on your own, that means you're on the counter track. I already answered my thoughts on Hassett. I mean, he seems to be qualified for his job. It's just whether his thought process is going to be his own or is going to be top down driven. Um, if you chose a lousy career, isn't owning a house one of the few fulfilling things you could ever accomplish? You can't be really bright and still have a male life. Well, I mean, then if you, I mean, maybe the people who are in accounting and nursing actually like what they do. Um, so, and if they don't, then maybe they should try to do something else with their life that is more fulfilling. So, yeah, that's I mean, I still do that still doesn't justify owning a house as your primary goal though. It could be a bright spot for somebody who otherwise is not happy with their life, but that doesn't mean it should be your primary goal in life. And there's other fulfillments outside your career that are still more valuable than a house, like having a family of your own or personal accomplishments or again, or leaving some sort of legacy in your community beyond yourself. Um, do you think it's possible to get away from the modern way of looking at housing as a major investment? The way to do that is you need to flood housing supply to the point that houses do not appreciate but depreciate like cars do. Japan is a good example of this. Like Japanese real estate, especially outside of Tokyo, has not really made much movement since the year I was born. And so as a result, you don't have this, and it's because of the demographic profile there. Like the supply is opening up due to attrition and very YIMBY construction policies. And so people don't really look at housing as like an investment for appreciation. Mortgage-backed securities will be there because that's more of a debt thing. And people generally pay their mortgages on time. And so there is a valuable market for people who want to have that kind of fixed income cash flow. So I don't really see a problem with mortgage-backed securities or anything like that. But if you don't want housing to be a tool of speculation, you just need to make it so that speculating on housing is not profitable. What do you think about top-down pro drift? Silicon Valley types who reflect New York norms and are kind of divorced from history. I mean, it depends. That's kind of yeah. That's a tough question because a lot of these people didn't come from those same old money backgrounds who are in tech, and a lot of it is just personal rebelliousness, which has nothing to do with really class. But pro drift, I think, of more of this that sense that it's the idea that lower class hobbies are adopted by the upper classes because of economic necessity. So I think there's a different force at play there. Um, yeah. Let's see. What are changes to make you would make to the U.S. if you were president? Um, that is a whole long conversation. There are a lot of things I would do. I would drastically reform the education system. I would drastically reform the monetary system. I would change how immigration works. I wrote a whole book on political philosophy under a pen name several years ago. I just probably do whatever I wrote in that book. Whenever I feel like sharing it to the public, I will, but I just hasn't really been something that's been on a priority list of mine. I have other things to prioritize beyond politics in my own career and personal life at this point. But yeah, there's a lot of stuff I would change. The main goal though is I try to get rid of moral hazards and try to eliminate all the bad incentives on society to kind of engender social trust and encourage people to act in good faith. Um, yeah. So um, let's see. I think I'm gonna wrap it up here. I'm starting to lose my voice and my throat is a little bit hurting because let me know what you think about this kind of these lectures. Do you like this presentation? Do you like my old style? And the next one I'm going to do is in 2 weeks, where I'm going to talk about just how to get out of the rat race more generally. But yeah, have a good night, everybody. And thank you guys for watching.